Hello, this is Kevin Prince from BMO Exchange Traded Funds. I'm going to say welcome back to the Market Insights webinar. We're going to take a little break there, but we're back at it for the next three couple sessions coming up. Let me spend some time today, and we're going to dive into due diligence in regards towards exchange traded funds. Now, like in the past, of course, I do want to say this is not recommendations. It really is market insights. And it's not really advice. It's just trying to provide you market insights around what to look at, what to consider when you make an informed decision yourself. Now, we're so pleased to have you back again because ultimately it's you who are helping drive in our content week over week over week. We're so pleased that people have taken the time and effort to actually also send us some questions in advance, because effectively that really helps us not only drive our content for today and some questions at the end, but also set some direction for the future too about what you want for insights going forward. So those who sent us questions this week, thank you very much. And for those who are thinking about for next week, please do that because it really helps set the tone and set the direction on a go-forward basis. We have a lot of resources. We just need your direction of where you wanted us to take them going forward. So thank you for that. With that, let's get started. I get the pleasure of joining with me today, Mackenzie Box, who is also with BMO Exchange Traded Funds, but on our product side. And again, we're going to spend a little time today and talk about due diligence around exchange rate funds, as well as we'd like to highlight for you some tools today that really help you maybe navigate your decision process out there. With that, let's get started. What I really want to start out today is kind of level playing field, or set the discussion off right. Yes, we're going to talk about due diligence, but when you're thinking about buying one ETF or another ETF, or buying a fund versus a fund, or fund versus ETF, all that's interesting, and we're going to spend some time on that today for sure. But I really want to highlight that at the end of the day, the most important thing for you in your performance and the volatility in your portfolio is your asset allocation. There have been studies, and these studies are 20 years old plus, and really they haven't been refuted. It really is saying that at the end of the day, your asset allocation is the key determinant of the volatility in your portfolio and the actual performance of your portfolio. So you think about it, your call of having US and Canadian equities is going to have a lot more part of your performance than just saying whether I have this Canadian equity versus that Canadian equity. So think about that, right? And same with the Canadian fixed income and equity. So ultimately, I just want to set the context here. That is your big decision. Once you move past that big decision, your asset allocation, now you're getting to the next level decision of deciding how to build that portfolio. And we want to walk you through that today as that discussion area of due diligence, picking one versus the other, what the process should be, and moreover, effectively, how do you land on that on a go-forward basis? So let's go through it. Now, as an ETF provider in the marketplace, I just want to also give you a context of what's going on in the marketplace. What we're seeing is it's becoming more challenging for the end investor, because while ETFs were invented here in Canada 26 years ago, I think the number is now, there's one ETF. There is no longer just one ETF, right? In Canada now, there's over 960 different ETFs, and what we're seeing, look at that, 38% year-over-year growth. These stats come from us from Scotiabank. Thank you for them for putting that together. Ultimately, too, there are now 38 different providers in this marketplace when it comes to exchange traded funds. And yes, there's some good money moving towards this. You're seeing $230 billion in exchange traded funds out there. And give you context around that, the mutual fund industry is about $1.6 trillion. So growing, but still a smaller part of the bigger managed money universe out there. Then last but not least, certainly seeing amount of money traded last year, certainly picking up and around exchange traded funds, but even picking up even more now. And we got to be a little chart here. We're showing you the growth of the industry year over year over year. So it's definitely growing. And I have to highlight the blue line is BMO ETFs. With inside that, we're roughly about 30% of the marketplace. iShares being the dominant provider, about 33%. So that's what you're seeing for the dominant. So about 4 big dominant providers, but really 38 different providers out there across the board. But with those 38 providers and those 960 products out there, how do you make that? How do you help yourself being comfortable with which one you want to buy and how you want to buy it across the board after you get past the asset allocation decision? So I've got Mackenzie here, and Mackenzie have helped put together a document around due diligence. And so I said, Mackenzie, maybe we can take that and let's take a look at that, building it into a webinar for this audience here to really give them the background. And let's go through some of the process for you to help you out once you move past that asset allocation decision. So the first one I think I want to get your insights around, Mackenzie, is all around liquidity. And I think there's a few more considerations around liquidity that people should look at when they're looking at an ETF across the board. So maybe you can walk us through what your thoughts are when you're looking at one ETF versus another ETF and looking specifically at liquidity in the space.
Yeah, and thanks, Kevin. Good afternoon, everyone, and thanks for joining again. And I think Kevin said it great. You know, year after year, we're seeing more and more providers come to market, more ETFs being launched, and you know, it can seem like there's a lot to navigate through the industry. So, you know, I think one of the first things you need to look at when identifying ETFs that suit your portfolio is really understanding the liquidity. And I think that's probably the most important thing you want to be mindful of. You know, higher trading volume can indicate enhanced liquidity and go beyond the underlying portfolio. And, you know, when you're looking at a broad range of ETFs, what we kind of do here is we actually, at BMO ETFs, we take a list of ETFs in Canada and kind of chop down the industry to make a quick and easy guide of, you know, the largest and most liquid ETFs in Canada. And we look at ETFs that, you know, have greater than 100 million in AUM and have greater than $1 million traded value in terms of volume. So that's kind of what we use so that we're really getting a sound set of, you know, ETFs that have that strong liquidity. So I think when you look at the industry, you know, it's important to identify ETFs that have that stability and the liquidity that you're looking for.
Well, I also like your other point you got here is looking at underlying itself too, because that's interesting. You know, what's the underlying liquidity itself? Because that could expose some potential issues if there's securities themselves inside the ETF that may not be as liquid. Because I think, you know, we talk about from time to time that an ETF is as liquid as the underlying, and to your point, if there's lots of trading on it, it's actually even more liquid than the underlying. What's your thoughts around, you know, looking for specific securities that may not be that liquid?
Yeah, I think that that's something you always want to be mindful, and you want to watch for your exposure to that. You know, if there's a certain exposure you are looking for that's maybe a little bit more of an illiquid asset class, I think you just want to make sure you're doing your due diligence around that, and you know, you are looking at you know, various volumes across the board, and just making sure you understand that exposure.
Yeah, good to highlight that. I think liquidity is a key consideration. You know, every once in a while they want to get in something, get out something. You can certainly see that in ETFs. Enhanced liquidity in ETF certainly helps out because it can trade more, can add further liquidity, as we certainly see in the last market correction. But ultimately, too, take a look at the weaker link maybe with inside that ETF to all the underlying being very liquid, because that's a key aspect there. But let's move beyond liquidity and let's talk about methodology, because now we're getting into the different types of ETFs out there. And we talk about that word smart beta from time to time, but you know, trying to move away from those fancy internal terminology. When you talk about methodology, what are you talking about, and what are people thinking about, what should be thinking about when they're looking at that?
Yeah, and I think understanding the methodology to an ETF is extremely important. And one of the things we like to stress a lot is to really look under the hood and make sure that you understand the product. And if you don't understand the product, it probably is not something you maybe want to consider. So I think, you know, as you do look at ETFs across the board, make sure that you're really getting into the weeds and you fully understand the product. And being that, you know, different exposures and concentrations can greatly impact performance and various risk characteristics as well. So, you know, looking at how an ETF is weighted, is it equal weighted, is it market cap? Looking at, you know, the index that it's tracking, or is it not tracking an index? These are all things that you have to be mindful of when you're looking at, you know, the methodology and how does it perform in different cycles, because, you know, we've seen the evolution to more smart beta products, you know, different providers coming up with different solutions for different markets. So you are going to get ETFs that perform well in certain markets and ones in others. So making sure that you really understand the ETF and what it's supposed to do is really key.
I like your point on holdings, because ultimately an ETF is just a basket, and those holdings are going to deliver the performance and the volatility no different than our first slide, of course, and making sure that those holdings represent the direction you want to be, whether they are in a broad market or a certain tilt of dividend value or growth or low volatility. Make sure you're getting comfortable with those holdings. Talk to me a little bit about the last couple of points here. Potential tax implications, and we'll talk about yield in a second too. But talk to me about that. Where does somebody get some information on that or insights around that?
Yeah, I think tax can be a big question. Seeing, do you want to hold Canadian listed versus US, then also brings into a whole other tax kind of conversation. So it's always important to understand that. And, are there foreign taxes that can be claimed if the ETF holds international securities directly? So in a lot of cases it can be. So it's just important to make sure you're understanding what the ETF is actually holding, because in some cases, if it's not holding directly, you can infer more taxes. So definitely something to be mindful of.
And I'd just like to highlight there too, most ETF companies post their last year's taxation and the attribution of their taxation on their public website. So look for it. That will help you get to the level of information if you want to get to that level of analysis on the tax implications. My kids, let's spend a little bit on the understanding net yield. To put it up here, why is understanding net yield? I mean, I can go to a tool, I can pull off yield. Why should I be looking at what a net yield is, and give me some insights?
Well, that's really what's important to you, right? So, I mean, sometimes you get trapped in different scenarios where you're looking at various yield figures, and I think the net yield is really what's going to benefit you. So it's always important to look at that and see how that can impact your portfolio.
And I highlight also on top of that when you're thinking about yield of a security, and there's lots of tools, we're going to show you some tools in a second, but take a look underneath the hood, exactly what Mackenzie started off with, right? Because if the underlying is not generating the yield to pay out to you as an investor, then you're probably going to get some of your own money back. So watch out for the net yield numbers. Like, make sure that the underlying is generating the yield that's being pushed out through the ETF at the end of the day. Just something to watch for. Let's move past methodology, because I'm still a key part, absolutely, because key part of performance. But let's talk about provider and support in the marketplace. Give us a little insight around that, Mackenzie. Why is that a key consideration?
Yeah, I think finding a right provider, given all the other elements, looking at liquidity, of course, and then the methodology that works for you. But I think going beyond that is looking at things like, at each provider, how many years have they been in the market? Generally more established providers can adapt to clients' evolving needs and investors' needs by providing, innovative solutions and being quick to market, as well as providing your core solutions. But you also want to look at like total assets under management, what the firm has in terms of a product shelf, and that's generally a good indication to the stability of the firm in the ETF market. And then I think another thing you want to look at is the level of support and education the firms provide. So looking at things like the website. Does the provider provide strategy pieces to educate you on the methodology so that you really do understand what's going on under the hood? Do they make holdings available on the website? Do they provide thought leadership? So I think these are all nice value adds and support that further educate you on the various products that providers have. But I think it's very important because it continues to educate and it helps you understand the products more and gives you confidence in what you're investing in.
Of course, Mackenzie, I'm going to shift into the big consideration everybody always looks at. We saved one of the best for last, cost, right? And I think, that is a key consideration a lot of people look at, and I agree that's a key consideration. But really, I think, you want to look at that asset allocation first for decisions, right? After you move from the asset allocation, then start looking at methodology, right? As we talked about, and all the other considerations, and then start looking at cost too, for that matter. So we purposely put it in this order. But Mackenzie, maybe talk to us about what you're saying when you're saying total cost of ownership. And then let's go through a couple of other things that people may not know them, because we're certainly looking at the MER as something, I already said terminology there, management expense ratio. What else do we people look at?
Yeah, and I think now more than ever, we're seeing investors be more fee conscious. And before I dive into those things too, there's a little graphic here on the slide too that really indicates paying less can add up and make a difference in your portfolio over time. So it's something you definitely want to be mindful of, but you also want to make sure you're getting the right exposure and the right portfolio construction vehicles for you. But when you think about total cost of ownership, the first thing you think about is management expense ratio, which Kevin alluded to. And then the second thing you want to think about too is the trading expense ratio. And those are all available. And then from there, you want to think about the spread. So a wider bid-ask spread means, there could be additional trading costs. So you always want to compare against other ETFs that are similar. And then, from there to even go, a step further from what Kevin and I were briefly mentioned earlier was currency and exposure. So are you buying a US listed ETF? In which case, then you have to think about, withholding taxes and other tax considerations, as well as potential currency conversion costs. So, with the growth of the Canadian industry, and now we're seeing so many options become available for investors, we're seeing products that are in US dollar, hedged to CAD and unhedged. So, it gives you quite a few options, and especially when you're looking at fee, those kind of fees can really add up. So there's definitely more options available now. So definitely something to consider when you're looking at the total cost of ownership.
Yeah, good thing to look at, because it's not just the stated MER anymore. There are a few more pieces, and your currency conversion cost being a great example. While that's not explicit to the individual ETFs in the Canadian marketplace, if you are investing and going beyond the Canadian marketplace, you could have a cost to convert from one currency and then cost to come back from that currency later on. And those are all things you want to factor in, because I love your graphic here, Mackenzie. And I know you put this together a few years ago, but costs really do add up, and factoring that in and considering that on a regular basis certainly makes sense. And it's not just about your accumulation phase where you want to save money. It's all around that decumulation phase too, if you can save money, because ultimately, what does it do for investors out there as a financial planner? It just helps your money last longer, and that's key. Or get more money to pay out, and then of course have your money last longer. So factoring in, thinking about costs, but not specifically just the stated costs, what are the other costs around there, and understanding those too. And again, they're trade-offs too, because you got to think about that exposure first. So thanks for the background there on the due diligence, Mackenzie. Let's talk about tools now and helping people navigate and putting these together out there. So maybe first we'll start with the roadmap and walk us through that.
Yeah, so I think, and we've showed this on a few other sessions previously, and we've gotten a few questions about it. This is our roadmap, which actually lists all of our ETFs that we offer, broken out into various categories. So I know the screenshot's quite small, but you'll see we have equities, sectors, fixed income, enhanced yield, like our covered calls. And it kind of just displays our quick facts about the ETFs. So you'll see fee, risk rating, yield, and some more info, especially for fixed income. But it's a really quick and easy tool that you can leverage to navigate our product shelf and identify, solutions that meet your needs. So this document is available on our public website, so bmoetfs.com, and it's right on the homepage. So I've just highlighted on the slide here. If you scroll down to the product list, it's just in the top right-hand corner. So it's updated on a regular basis, but a great quick overview of the product shelf here at BMO.
Thanks for that, Mackenzie. My constant joke about this one is it kind of looks like a periodic table from time to time, because all the elements to our portfolio, because there's all those little key considerations around the board. So good to highlight that, and really thinking about that ETF as that portfolio construction tool and seeing the choices out there, because again, it comes back down to what your exposure you want there. Then from there you figure out which one ETF, BMO or otherwise to utilize to build that asset allocation. From tools, maybe you'll also walk us through what you'd find on the website, because as we talked about due diligence, we mentioned a few things to look at. So maybe, and then this is on a BMO ETF website, but also you can find this on other websites too. So what are you highlighting here, Mackenzie?
Yeah, so I mean, in addition to the roadmap, we display, I would say, more in-depth info in terms of performance regarding each ETF. The first image there you'll see is performance, so historical performance, and in some cases it shows the index as well, so you can see how it's done. You're able to adjust the date at the top, so you can toggle between time periods if you're looking, how did the ETFs do it during this year at this month. You're able to go backwards and look at that, which I think is great. And then in the middle there, you're able to see daily performance charting, which also I think is extremely helpful, and you can kind of toggle between the time periods that you want to see. And then we also display our holdings on a monthly or on a daily basis. Again, just giving you more information so that you can really understand, what is it that the ETF is holding, and further understand how it's performed in different markets, and give you more insight to the ETF.
Well, I just want to highlight one more thing in the middle there too. That line that's cascading up and down there's actually two lines there. That's actually showing our tracking relative to the index too. And you'll find that in other companies' websites too, making sure that you're effectively buying an index, how are we doing relative to that index? And you can see here that it's pretty hard to tell there's a difference, and that's what you want. That's absolutely what. And then Mackenzie, maybe talk about some of the other tools we offer on our website too to further help with that due diligence process.
Yeah, and so I think we've mentioned them briefly on other calls, but one of the things that I think is most useful on our website is our ETF tool, our ETF tools. So I've just quickly highlighted here where you can access it. So it's right on the bmoetfs.com homepage, and there's an icon there that says tools. So you can just click on that, and we have 3 different tools you can use. So if you just move forward, we have a comparison, which allows you to compare up to 5 ETFs at a time and look at things like fee, yield, performance, holdings, methodology, and whatnot. And it's a really good snapshot that allows you to dive a little bit deeper on, certain ETFs that you want to compare against, or even, if it's in your portfolio, if you just want to see how they compare against one another. In the middle screenshot there, that's an example of our screener, which allows you to find ETFs based on certain criteria. So you can screen for an ETF by a particular provider. You can screen by AUM. So again, if you're looking for those really high liquid names, you can screen by certain AUM levels as well as volume to ensure you're really getting those highly liquid ETFs. Or one thing that I really like is that you can screen by holding. So if there's a particular holding, you want to see which ETFs hold it, you can just search by, if it's Microsoft, for example, you'll see a list of all the ETFs that hold Microsoft along with the weight. And then lastly, our tool on the right-hand side is a portfolio generator tool. So this allows you to build out a portfolio with various ETFs and allows you to change your weights and adjust them. And it just gives you a brief overview of portfolio characteristics and how your portfolio would have done over time.
Perfect, and good insights across the board and good ways to do due diligence. And I like that holdings aspect too, because you always want to know if you're complementing something or duplicating something by taking a look beneath the hood. That's another way of seeing that by screening for that specifically. Go into a little bit about this here from your charting aspect here, Mackenzie. Give me some little more insights on the tools, and you're doing here specifically around emerging markets.
Yeah, so this is just a quick example of the comparison tool. So I just pulled in some emerging markets to show the performance over time. And what I like about it is it's a quick and easy comparison to see, here's these different ETFs across the board. Obviously, we include China ETF, again, just as a comparison. but just to see how they're performing over time. And, you can adjust your time periods, 1, 3, 5, common inception. So it gives you a good idea of what's performing when and how they're doing over time.
And one quick thing I'll highlight here too, if you ever want to do a deep dive on any one of the ETFs listed above, those where you see ZEM or VEE for that matter, that's a hypertext link, and it'll take you to a one-pager deep dive on that product. In fact, on that one-pager, you can actually then have a link off to the respective company's websites to even dig into more further detail too. So it really does work as a core due diligence tool for you to start off across the board. And then other educational resources out there too, Mackenzie?
Yeah, so we talked about some of the various portfolio data elements of our website, but we also have a lot of really informative educational pieces as well, ranging from methodology documents to videos, webinars, and podcasts. So we have a learning center where you can also go, which is really more an ETF 101, but then we also have within there a few different strategy pieces and methodology pieces that dive a little bit deeper into our various methodologies for certain ETFs. So that's all available on our public site. So if you have questions on particular ETFs or understanding the methodologies, I would encourage you to go there and check it out.
Excellent. And to highlight that if you want to see the past webinars too, like this one, we have a whole series up now that, of course, where you registered, you can see them all there. And then I also want to highlight tools within inside the industry, because we certainly have BMO ETFs tool, but I'm going to highlight a couple other tools beyond BMO. Morningstar has a pretty good tool on their website you may want to utilize. It's not a side-by-side comparison, but it is a good deep dive tool in my view. And I like how it looks at the bid offer spread that Mackenzie talked about, right? And that key consideration there. And other key things like the premium that it's trading at relative to the underlying. Again, that's that conversation Mackenzie had about total costs out there. So, and the total assets within inside of the security, right? In this case, 8.6 billion. But it does give you a good way of diving into an ETF. Take a look at Morningstar. All you do is got to put the ETF ticker in there, and it'll give you a snapshot like this for you to dive into. Hand in hand with that, if you want some other tools out in that marketplace, one thing we talked about when we had NEO on the NEO exchange on our show in the past is we talked about volume. Mackenzie talked about volume as a trading aspect, a key see about trading. I agree. Now, some of the tools out there you may be familiar may not have all the information you're looking for. So if you're looking for volume, take a look at Stockwatch. And what I'm showing you on purpose here is a list of all the exchanges. And I snapped this kind of probably maybe 2 in the morning because it wasn't trading all the exchanges that time, but you would be able to see the volume and trading across the multiple exchanges out there, not just the TMX, which will give you true insight of the actual volume and the efficiency that ETF might bring to the marketplace. Beyond looking at individual ETFs, right? If you want to kind of take another view of the marketplace, certainly we're hearing a lot more talk about social responsible investing in general. If you want a tool in regards towards that, a completely different view, you can go to the RIA website. They have a nice little tool on their website that helps you filter down across the board different metrics in regards towards responsible investing that will help you make a selection in that process. So take a look at that website too. And frankly, if you're looking for some insights in the marketplace, a website I've come across and start to enjoy on a regular basis is Cut the Crap. So take a look at that one. It's kind of a fun one too. So lots of good tools out there beyond just straight the BMO ETFs tools. And of course, if you're confused and you're just starting out, you want some simple tools to get going, well, I'm going to highlight there's those great asset allocation ETFs out there. Of course, BMO has them, right? And our ZBAL and ZGRO and ZCon, of course. But Vanguard has asset allocation ETFs too, very popular. And same as iShares too, for that matter. So if you're looking for a place to start, in this case, they're taking broad market indexes and just building a diversified basket. Not a bad place to start, and then build around it as you think about if you're just starting out. With that, Mackenzie, maybe we'll take a look at answering some questions that came in from last week. Again, thank you for all those people out there that have taken the time and effort and send us in some questions. Now, again, we can't provide specific advice, but we're going to do our best to give you market insights in regards towards these questions. So let's start off, Mackenzie, a little question in regards towards gold. Certainly been popular, and it's certainly been a very interesting trade to watch across the board. Now, taking a major jump, and what we would kind of get is some understanding that where is it going to go from here? I don't know if we can do that, but I think we can maybe give you some insights about how to look about the ETF in the marketplace. And so, Mackenzie, maybe walk me through your thought process when you're evaluating it. We can use this as a due diligence conversation.
Yeah, I mean, there's definitely been lots of talk about gold in the media, so definitely we're seeing lots around that. But when you look at gold, it's really, you're looking at it for a few different reasons. It's a good portfolio tool. It lowers correlation to the broader portfolio. So once you've kind of decided you're going to go for gold, there is a few different things that you want to consider. Do you want to go with physical gold? Are you going to go with senior gold, junior gold? So there's a few different options that you can take a look at here. And on the screen, I've actually used our comparison tool just to highlight a few different options. So we've got our ZGD, which is more of our senior. We've got our ZJG, which is our junior. We've got the iShares, which is also a more of a senior. And then we've got the iShares CGL, which is more of a physical exposure. And what I think is really interesting is when we pull them up on this tool, they all have very different approaches. So now you can look at the fees across the board, but if you look at the objective and the way the portfolio is constructed, they're actually vary quite differently. And you'll see that in the performance chart in the next slide, that you're getting that performance across the board. I mean, gold's been great for the last 6 months, and even looking at the 1-year number, if you're in gold, it's a good place to be. But you do get that variance across the board, especially as you go to these different exposures. And even in the next slide, I've done a comparison just looking further at the holdings. And you'll see just how much the range is, especially looking at the seniors and the junior. You're getting, so ZGD, for example, is equal weighted versus XGD, which is market cap. And there's quite a variance in the holdings, and even looking at the percentage weightings. And then again, bringing in the junior, you are getting quite a difference there. So again, stressing the importance of looking under the hood, understanding what the ETF is holding, and how it performs in different markets.
Thanks for that, Mackenzie. A couple more questions coming in. So we did have a good show roughly, a little more than a month ago, I guess now, where we kind of looked at puts and puts options with the TMX on with us. And part of that was talking about all the options out there to kind of hedge your portfolio, because the investor here is simply looking at his potential to correct again. How can he set himself up? And one of the concepts we talked about was inverse ETFs as another way to play the marketplace. So maybe, Mackenzie, you can walk us through maybe those choices one more time again, and then maybe some thoughts around that too.
Yeah, so I mean, there are a few products out there. Some of our competitors do have these products, but I would just caution that those trades are greatly impacted by volatility. So they're definitely more geared towards the short term versus a buy and hold. So when you are considering that as an option, just caution that it's definitely more of a short term thing versus a longer term. And I think when we talked about this last time, you can short an ETF, you can buy a put for protection, and you can buy leveraged ETFs. So yeah, just as you go through that process, you just want to keep in mind that these are really the short term hold. And the longer you hold, the greater the dispersion on the return. So just something to be mindful of when you're exploring this field.
Yeah, good point there, and also good to highlight that you can buy the puts, or of course short the ETF too, because there are securities. So there's lots of things you can do within respect towards ETFs to hedge your position across the board. And if you like, there's a good webinar on that too. Take a look at the replay. We'll go through that in more detail. Taking a look at the NASDAQ and the S&P indexes out there, and we of course have the S&P, and I'll let everybody know We just booked the NASDAQ to come join us in September, so I'm looking forward to that, and I'll get you more details in the future. But when you look at the NASDAQ and the SP ETFs, there are a lot of holdings, and so there could be very high correlation. How do you bring some diversification into that is, I think, the key thing to ask you there, Mackenzie.
Yeah, I mean, you're definitely right. You are going to see higher correlation to both. So if you're looking to add in that diversification, you kind of have to expand your scope and look beyond. So, if you want to lower your correlation, you're going to need to look at, emerging markets, developed markets, and bring in different elements to your portfolio in order to get that lower correlation.
Yeah, that's exactly it. Going back to that asset mix, key thing there. And I also like to highlight on your tool, of course, we talked about there, you can look to see if it's holding Apple. Maybe you want to move away from a company that's holding too much Apple, and make sure you look underneath the hood of the ETF, the sector mixes too, right? Because that all helps to get a different outcome across the board. But holding some of the same, that's going to give you a similar outcome, right? So look for diversification, especially international, and maybe even between the asset classes, fixed income, equities, and that kind of stuff. So that's the key there, is that diversification over the long term. That's how much time we're going to have you able to go today. I'm going to say thank you so much for taking the time to join us. We're going to be back here on next week, Monday. We're going to spend some time, we're going to talk about flows inside the ETF industry and what that means, as in where the money's moving to and where the money's moving away from, give you some insights around that. In addition, we just came out with a midterm report, kind of gives you a midterm on the ETF industry, a report that kind of gives you some direction itself where the ETF industry is going, and maybe help you think about how you want to build a portfolio around all those. So ultimately, look forward to having you join us again next week, Monday at 1 o'clock. Until then, have yourself a good week. Cheers.